Ladies and gentlemen, good day and welcome to Q1 FY2024 earnings conference call of Sharda Cropchem Limited, hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Darshita Shah from Antique Stock Broking. Thank you, and over to you.
Yeah, thank you. Good evening, everyone. So, on behalf of Antique Stock Broking, I would like to welcome all the participants in Sharda Cropchem's first quarter FY2024 earnings conference call. On the call with me, we have Mr. R.V. Bubna, Chairman and Managing Director, Mr. Dinesh Nahar, General Manager Finance, and Mr. Jetkin Gudka, Company Secretary. Without any further ado, I would like to hand over the call to Mr. Bubna for his opening remarks, post which we can open the floor for Q&A. Thank you, and over to you, Bubna ji.
Thank you, madam. Good afternoon and very warm welcome to everyone present on this call. I hope you all are keeping safe and healthy. Along with me, I have Mr. Dinesh Nahar, our General Manager Finance, and Mr. Jetkin Gudka, Company Secretary, and our investment advisors, SGA, are also on the call. Hope you all have received the investor deck by now. For those who have not, you can view them on the stock exchanges and the company website. Through its expertise and commitment, the company has established itself as a trusted partner in the agricultural industry worldwide. With a dedicated focus on seeking registration in its own name, Sharda continues to allocate substantial resources, thus establishing a strong foothold in the market and effectively navigating the competitive landscape. Sharda Cropchem's total product registrations stood at 2,859 as on 30th June. As on 30th June 2023. Additionally, 1,118 applications of the product registration globally are at different stages of approval. The capex for Q1 24 stood at Rs 155 crores. We have successfully maintained strong relationship with third-party manufacturers in China and India, mitigating sourcing dependencies and ensuring quality product at optimal prices. Over the years, we have built a strong network within our global markets. Additionally, we are benefiting through the economies of scale and leveraging our supply chain to deliver value to the customers. For Q1 FY24, the revenues have degrown from Rs 825 crores to Rs 638 crores. This is due to lower sales volume in Europe and LATAM on account of high inflation, ongoing recession, and adverse weather conditions. The company has also experienced significant decrease in the product price realizations, especially in USA. Gross margin reduced to 8.7% in QY F124. Raw material and finished goods sales prices have reduced substantially. This has led to a stock revaluation as per accounting policy and has impacted the gross profit and profitability to the tune of Rs 71 crores. The company is seeking an improving trend in Q2 FY24. With this brief overview, I would now like to hand over the call to our General Manager Finance, Mr. Dinesh Nahar, for discussing our financial performance. Thank you.
Thank you, sir. Good afternoon, everyone. Coming to the Q1 FY24 performance, revenue stood at rupees 638 crores versus rupees 825 crores in Q1 FY23, a degrowth of 23% year-on-year. Agrochemical revenue reduced mainly due to low volume demand in Europe and Latin regions on account of high inflation, ongoing recession, and adverse weather conditions. There was also low product price realization in USA during Q1 FY24 compared to the same period last year. Gross margins stood at 8.7% in Q1 FY24 as against 25.4% in Q1 FY23. Raw material and finished goods sales prices have reduced substantially. This has led to a stock revaluation as per accounting policy and has impacted the gross profit and profitability to the tune of rupees 71 crores. EBITDA stood at negative 66 crores, which is mainly due to the decline in the gross margin. PAT for the quarter 1 FY24 stood at negative 88.6 crores. Coming to the split, agrochemical business degrew by 23% year-on-year to rupees 475 crores, whereas the non-agrochemical business degrew by 23% year-on-year to rupees 162 crores. In the agrochemical space, Europe degrew by 21%, NAFTA region degrew by 14%, LATAM degrew by 51%, and ROW region degrew by 16%. Europe contributes 52%, NAFTA 35%, LATAM 8%, and ROW 5% of the agrochemical business for Q1 FY24. In the non-agrochemical space, Europe degrew by 64%, NAFTA region degrew by 26%, LATAM region degrew by 16%, whereas sales in ROW grew by 96%. Europe contributes 13%, NAFTA 52%, LATAM 7%, and ROW 28% of the non-agrochemical business for Q1 FY24. Thank you all. We can now open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question will press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you will press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Samir Deshpande from Fairdeal Investments. Please go ahead.
Hello. Good evening, everyone. Hello.
Yes, we can hear you. Please go ahead.
Am I audible?
Yes.
Actually, the Q1 results, we basically have a big surprise that the inventory loss provisions, etc., have taken away the big chunk of the gross margins. So, but in the March quarter after the results, also there was nothing of caution which the management expected in May that this type of a big erosion will happen in the product prices. Can you elaborate a bit on this? And going forward, you have mentioned that the product prices have started improving. So what will be the scale of the improvement? Because the fall has been quite precipitous.
Yes, sir. Now you'll have to break your question into two parts. Why this was mentioned, not mentioned earlier during the March quarter performance. That time the signals were not available this drop has started very slowly, very abruptly, and initial stages we thought that it's a very small thing that will not go down to so deep. It happened to have that way, and it went down very deep. What your next question, Mr. Samir?
No, actually, you mentioned that the product prices, the drop was quite sudden. But so in May also, we were not in a position to get any view on this.
See, in May, we were only discussing about the quarter 4 performance and not so much about the Q1 or April to June quarter. Our concentration was only in the last quarter of the last financial year.
That is true. Okay. But the foreign exchange, actually, the foreign exchange rates and euro and US have been quite good for the company, seems that because the ratio has been quite 1.1 and something. That normally is a thing which benefits the company. So now these falling prices has hit us in a big way, 71 crores. So if you add back that 71 crores, we have a profit before tax of hardly, still we have a net loss. So that is a bit, so the provision has, what is the exact provision for this? Is it 71 crores or something more?
71 crores.
Achha. And now, secondly, it is mentioned that there is some improvement in the prices in Q2. So what is the scale of the improvement? Because from 100 rupees we have fallen to 40. Suppose from 40 it is down to 50 or it will come back to 78.
Mr. Samir, we have not said it is an improvement. There is likely to be an improvement. We feel it has touched the bottom, but it has not started improving, and the effect of this improvement will have a very long time lag to get reflected into the markets.
Achha. So the basically recovery is expected to be slow. Our inventory, which was about 1100 crores in March.
Yes.
If I'm correct. So has the inventory now we have sold about some 650 odd crores. So what is the current inventory which is likely to now on 30th June we have made the entire provision?
Let me see. Mr. Samir, the current inventory is 953 crores.
And for that also the provision has been made for the fall in the prices entirely.
Yes, please. Yes, please.
And you expect the things to improve going forward?
Yes, please.
Price movement, but it is likely to go a bit slower.
Correct.
What is the effect of El Nino or all those things on our sales in any of the markets?
Effect of what?
El Nino.
El Nino.
Yeah.
No, sir. El Nino is not yet come into the picture. It has not shown any signs or any adverse effects on the market that we are dealing in.
And the fall in Europe and Latin America, you mentioned it because of recession and all those things. But since our products are actually basic necessities, so has it affected so sharply in the volumes? Is it due to the inventory build-up there?
Mr. Samir, you answered my question. It is due to excess supplies. The production has increased considerably in China during last 1 or 2 years, and excess availability and reduction in the cost of raw materials for our manufacturers.
So now if not...
Deshpande, I'm sorry to interrupt. Can you please join back the queue?
Okay, just one question I wanted to know. Hello?
Can you join back the queue, please, as the other participants waiting?
Okay.
Thank you. We have our next question from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Good evening, and thanks a lot for this call. While you illustrated the kind of challenges you are going through, in terms of what you are seeing and hearing from China, is it possible to give a sense in terms of what is the percentage increase in price in terms of value or volume terms? And when one can expect that to reasonably stabilize? Well, obviously, it depends on the recovery in the Chinese
Mr.
economy.
Ramesh, your voice is not very clear. The words are getting mixed up.
Can you use your handset, please, Mr. Ramesh?
Hello?
Yes.
Hello? Can you hear me now?
Ramesh?
Hello, can you hear me now?
Yes, we can. Please go ahead.
Yeah, so... Yeah,
Speak a little louder and slower. I mean, speech should be a little slower and voice should be louder.
Yeah. So, in terms of your own thoughts on China and the excess supplies, is it possible to share what is the percentage increase in supplies in volume or value terms in the last 2 quarters? This seems to be impacting all companies. And secondly, what is the sense to get in terms of when these excess supplies will be evened out based on the supply chain, China itself stabilizing based on growth in consumption there? Because there seems to be a mismatch in China, what China is producing and what we pursue. That's my first question.
Can we answer your question first, one by one?
Yeah.
See, Mr. Ramesh, in China, there are no authentic statistics available about the stocks and things like that. We had an exhibition in the 3rd week of May, and we were there, we having a stall, and all the manufacturers that visited us had only one thing. They have thousands of tons of the raw materials in the stock, finished products in the stock, and finding it difficult to get offloaded, sell them. And many companies which had 5, 6, 7 manufacturing plants have stopped 3, 4 plants in order to take care of their working capital and to take care of the excess stock that they have. So the stock is huge, and the price fall has been also unprecedented, which we have not seen in about 20-30 years of our experience of dealing with these products.
Okay. So, if I may have a follow-up question. So, in terms of the overall volume growth in your results for the first quarter 24, what is the percentage growth in volume included in the revenue?
1 minute, sir. There is no growth in the volume. There is a degrowth in the volume to the tune of about 11%.
11%. And finally, in the working capital cycle, when do you see that going back to normal working capital cycle? Because there is an increase of 29 days, including 17 days in inventory as June 23. So when do you see that stabilizing and getting back to normal level?
Sir, it will, we are hoping that it will come back, it will recover, but timing and target dates is difficult to predict. It could happen in the next 3 months, or it may take a little longer.
Okay, thank you very much, and wish you all the best.
Thank you.
We have our next question from the line of Tarun Agarwal from Old Bridge. Please go ahead.
Hi, thank you for your time. Just 2 questions from my side. If you could give us region-wise volumes for the current quarter and the base quarter. And second, you mentioned that you have about 2,250 registrations or a similar number, 2,859 registrations at the end of the quarter. Could you give us a sense on what will be the unique molecule to this 2,859 registrations? And third, on working capital, there's been quite a build-up from 90 to 120 days. If you could comment on that. Thanks.
Now, Mr. Tarun, you have to go one by one. The first question, if I remember, is on the volume compared to the same period last year, region-wise.
Yes.
Am I right?
Yes.
In Europe, the volume has gone down by 37% compared to the same period in last year. Latin America, it has gone down by 53%. NAFTA region, there is a growth of about 49%, and rest of the world, there is also a growth of about 47%. Overall, there is a degrowth of 11%.
Okay. The second question is, Out of your 2,859 registrations, if you could give us what is unique number of molecules here?
Now, I think your question is very unclear to me. I don't understand what you call as a unique number of molecules.
What I mean to say, sir, is, for instance, for a particular technical, you might have registrations across multiple countries, right? For a particular formulation, you might have registrations across multiple countries.
Yes.
So,
now I have understood your question. You mean to say that one molecule can have multiple registrations, and
correct.
same registration in two different countries are two separate registrations.
Correct.
So to answer your question about molecules, I think this 2,800 and odd registrations will constitute about 130 to 150 molecules.
Wonderful. And last, sir, on working capital, if you could comment, it's moved up from 90 days to about 120 days.
See, one of the biggest factors is receivables. Receivables have gone up from 109 days to 120 days, and inventory days have also gone up from 68 to 85. The creditors days have remained at 85 days.
Yes, sir. That's the present, it's disclosed in the presentation. I wanted to understand on the ground what has driven the inventory days and receivable days to move up.
I didn't understand. What is presented in the presentation is the correct fact. I cannot understand how can it be different from something different.
Sir, no. The question is, what has led to the inventory days and working capital receivable days to increase by the number that it has versus the same period in the last year? I mean, operationally...
Hello? Mr. Agarwal?
Yes.
Yeah. We have had to take back a lot of sales return from our customers because they said that they are not able to sell, the demand is less, the prices are going down. So, because of that, they have returned a lot of goods back to us, which we have accepted, and that has led to increase in the inventories.
Okay, sir. And last question, sir, what is the expiry period on the inventory or the life of the inventory?
Well, the life of the inventories is normally 2 years, sometimes it is 3 years.
Okay.
But the products do not get discarded after the life of this thing. They are always renewable, and they are not something which gets destroyed or rotten.
Okay. Thank you, sir.
Thank you.
Thank you. We have a next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Yes, please go ahead.
Thank you very much, sir, for the opportunity. Sir, I just wanted to understand, in the light of the current industry scenario, where you expect recovery to be slow and even the price erosion we have seen, right? And even the returns from the customer. So how do our guidance stands now? Now, I think in the last quarter we were of the view 15 to 18% growth with 18-20% margins, right? So how do we change that?
Sir, it may go down to around 10%. This is just an estimation. It's too early to say that. It may go down to around 10%.
Revenue growth?
Yes, please.
And what about the margins?
Margins, it is difficult to predict because it all depends upon how much time does it take for the Chinese inventories to get absorbed and the prices going up. So it's going to be a little difficult question at this stage.
Okay, understood. And this 71 crores, the stock devaluation impact, that is done, right? We don't expect those kind of impact going into some quarters.
Yes, more or less you are right.
That's it from my side, sir. All the way best. Thank you.
Thank you.
Thank you. We have the next question from the line of Rohan Gupta from Nuvama. Please go ahead.
Bhugaji, hi sir, good evening.
Good evening, sir.
Sir, a few questions. So first is on volume degrowth, you mentioned actually 11%, while
Yes.
our top line decline is roughly 22%. Can you further give the bifurcation between price decline and the currency? Because price decline seems only at 11%, which I think is quite limited property. So what is the further breakup of currency and price?
I'll tell you. Currency, there's a growth of 6.5%. Volume, there's a degrowth of 11%. Price and product mix, there's a downside of 18%. And total growth is about 23%. Degrowth, sorry.
Yes, sir. Sir, in terms of the inventory write-down, 71 crore you have taken, and you mentioned that it actually covers your current inventory stock of close to 950 crore rupees. Do you see that, as you mentioned, the prices in your view have almost bottomed out? We are already sitting in almost July is over. So do you see that there may not be any further chance of any kind of inventory write-down? And how do you see that the channel is sitting right now in terms of inventory? As you mentioned, a lot of sales returns have impacted your growth. So, or it be too early, or have you seen that the prices have bottomed out and the channel inventory is almost at a lower level, or still a lot of pain has yet to be seen in coming months?
Rohanji, there are two. I'll answer your question in two parts. One was about the prices. The price we feel, this is our guess and hunch, that the prices have gone down, and then some products the prices have gone down to almost less than 25% of what was prevailing at the end of or during the last quarter of last year. You know, so we feel that there is a tremendous slide in the prices, and they will not go down further. As for the second question was about the inventory taking off. This is going to be a slow process because it all depends at what stage the Chinese are able to increase their sales prices and get the sales. You know, today Chinese are very desperate to get their stocks offloaded. You know, so this is going to be a little. It's too early to predict on that. You know.
Sir, just trying to understand the core of the current scenario. I understand that there was this inventory build-up which was happening, and also because of China reopening and initial years, I mean last 2 years post-pandemic, many agrochemical players and dealers and all was in a inventory build-up mode because there was a continuous disruption in supply from China. Where with increased supply from China, it may seem that now there may be no more logistics-related challenge and disruptions in supplies are over. That's why they want to reduce the inventory. However, do you see that ground level, farmer level consumption has come down because it doesn't look like that agri-commodity prices are softening anytime near, and farmer level consumption still looks decent. So is it all a market correction, trade correction, or you see that there is a real demand disruption?
Your question is too long. I think you should break it down.
Sir, I will just cut it short. I will just say that
one by one.
Yeah. So the question is same. Is it a inventory reduction which is happening in inventory based, or you see that there is a farmer level consumption has come down?
So both. The farmer level consumption has also come down. Also because of the psychological factor, farmers are not going to, not buying anything for the future, fearing that the prices may still go down. So their inventory level is also going down. Secondly, the weather factor. Weather has not been very friendly in many regions. Many regions are seeing droughts, dry weather. In other places, there's a very heavy flood. So the farmer level demand has also come down, and the psychology to build up the inventory for future has also led to this increase in the inventory level, the farmer level, consumption at the farmer level. Now your next question, sir.
Sir, you also mentioned the growth guidance. Earlier you were talking 15 to 20%. You just mentioned that 10%. 10% what you're talking is growth, or you see that 10% on an annual basis growth?
Annual basis growth, 8 to 10%.
So irrespective, I mean, despite the price fall of at least 20%, you are still expecting a volume growth of 10%.
Yes, sir.
And despite the current scenario being so weak, what gives us that confidence?
That's our own sense of the market, and considering, I would say the own estimate and sense of the market. I don't have any statistics or any figures to sort of support it. This is our own understanding and guess, sir.
But sir, you are talking roughly 30% kind of volume growth, assuming 20% price drop. So that is a very encouraging statement, sir. If you see that, 30% volume growth, this kind of volume growth that has been achieved in last year. So that's what I was just curious to know, that despite the current scenario, you are still confident of at least 25% volume growth.
Just 1 minute. Just give me one question. Yeah, Rohanji, our main seasons, my main quarters are Q3 and Q4.
Right.
And right now we are in just finishing on Q1. Just as like I was answering to one of your questioners some time back, by end of April or middle of May, we had some signs, but we not a precise idea as to what is coming for us, and what has come is a very big surprise for us. And these things, these very big surprises don't last for very long. There are always some corrective factors. This is a law of nature.
Fine enough, sir. Sir, thank you so much.
Okay.
Thank you. We have a next question from the line of Karan Tareja from ASK Investment Managers. Please go ahead.
Yeah. Good evening, sir. I hope I'm audible.
No, you're not audible. You have to speak a little louder, sir.
Okay. Is this better? Can you hear me now?
Now it is better.
Okay. So the first question is around the depreciation. It seems to have year-on-year grown from 55 crores to 70 crores. A fairly outsized increase in depreciation. If you could elaborate and explain that.
Sir, I think depreciation is mainly linked to our investment into registrations, which are intangible assets. So as we are playing more stress, registrations is our basic backbone of our business model. We are investing extensively on the registrations, and these are leading to higher capital investment and higher depreciations.
Okay. So this 70 crores quarterly rate will sustain in the future quarters as well, or will it increase further for the next 3 quarters of the year?
Mr. Gangan, we cannot say it very with surety, because if you have understood our business model, registration process is very unpredictable. You cannot plan and follow that process. The registration process is filled up with so much of uncertainties, like field trials, weather, and we are dealing with government authorities who are never predictable. Sometimes they meet after 3 weeks, sometimes they meet after 3 months. So all these uncertainties in this quarter, we have had to pay substantial amount of DIPA compensation to our for the registrations in NAFTA region, United States, but this is not going to be continuing the same pace.
Okay. Yes, sir. And, going back to your commentary in 4Q, there was an indication that gross margins could be between 26 to 30%, with possibility of it being closer towards 30 rather than 26. First quarter, adjusted for the inventory write-down, it would still be 20%. I'm just trying to understand second half as you scale up, and if prices, remain stable, as it seems to be the case now, can you go back to at least 25%, 26% mark, or at this point in time, even that is a difficult sort of estimate to make?
My answer is it's going to be difficult because we have to carry the load of first quarter where the gross margin has been on the negative side.
No, I'm asking for specifically for the third and fourth quarter. I'm talking on a quarterly basis, not for the full year FY24. I understand full year will be impacted by the first quarter, but in the coming quarters, are we looking at gross margins heading towards 25% mark?
Yes, we can.
Okay. Thank you, sir. I'll get back in the queue.
Thank you.
Thank you. We have a next question from the line of Dhruv Muchal from HDFC Mutual Fund. Please go ahead.
Hello, sir. Thank you. Sir, one thing is, what is the sales return amount that you have booked in one? Which was probably you had booked that sales in last year and now you have reversed that?
1 minute. Let me get back to this. Sir, in the quarter one, our sales return has been to the tune of 135 crores.
Okay. Got it. Sure. And secondly is, sir, earlier based on understanding, it was, what we were getting feelers was that the excess inventory or oversupply was primarily at the dealer side. For example, US and Europe major dealers had overstock so much because of supply uncertainty. So your commentary is also suggesting that there is also excess inventory even at Chinese manufacturers. They are also seeing excess inventory. So is that case? I mean, they overproduced because they were expecting the demand to be so weak?
Yes, you are absolutely right. They overproduced and they have gone through the difficult period of corona. Their productions were limited because of many compulsions and factors. And all of them have disappeared and they are very enthusiastic to produce as much as they can. And now they are feeling very sorry for the situation that they have landed in. There is a huge inventory at the manufacturer's level. As I mentioned, some manufacturers have shut down their plants in order to tackle this inventory situation.
But sir, is it possible to give some sense on the quantum? Say, for example, if excess inventory at dealer level or say retailer level is say 100, what would be excess inventory with the manufacturers? Some sense, some specification if you can help.
Mr. Dhruv, we are asking a very difficult question. There are no statistics available, there are no published informations. And when we talk to the manufacturers, they say they are sitting with 1,000 tons of this product, 2,000 tons of that product. Now, we believe them what they are saying is true, but I do not know whether it can be 1,500 or 1,800. And it doesn't interest us to go into that detail. They'll also find it a little peaceful and it doesn't lead to a good discussion.
Sure.
So our idea is to just get the feeling that they have a lot of stock. What is the amount of stock? It's not a pleasant question to ask them.
Sure, sir. And the last question is, this weakness that we are seeing or the oversupply that we are seeing, is it across molecules or there are very specific molecules where you are seeing this? I mean, very old molecules like, for example, glyphosate and others, and some of the newer age molecules that is not much of pressure. So is that fair to say or it is across molecules?
I can answer that question. The glyphosate prices have come down to 25% of what they was prevailing about 3 months back.
Yeah.
And a lot of related older molecules, 2,4-D, Mancos, everything has crashed. But that doesn't mean that the good molecules have also crashed, may not be to this extent, but quite a substantial extent.
Okay. Sorry, one last question to squeeze. So first quarter, your CapEx is about 150 crores. What should we assume for the full year?
Pardon me?
For the full year, what should be the CapEx be?
Full year? It should be around 400 crores.
Okay. Sure, sir. Thank you so much and all the best, sir. Thank you.
Thank you.
Thank you. We have a next question from the line of Sonal Minhas from Prescient Cap Investment Advisors LLP. Please go ahead.
Hi, sir. This is Sonal Minhas. Am I audible?
Yes, please.
So my question was linked to what the gentleman for me was asking. I wanted to know if we consider a period of, let's say, 2 years or 3 years, some of the old molecules, how much has the price or the realization corrected back? If you could,
Mr. Sonal, you have to speak a little louder. Your voice was not very clear to me.
Okay, sir, just give me a moment.
Am I audible now, sir?
Yes, sir.
Sure. So I was saying that for the old molecules, which you were answering to the gentleman earlier, I wanted to understand from a 2-year or a 3-year perspective, because our realizations are going up, how much has the price corrected by for the old molecules if we consider a 2-year or a 3-year period, basically? Are we back to our pre-COVID realizations, or are we below those? If you could just give a structured answer to that.
We are below the pre-COVID prices.
Okay, and by how much?
By COVID period, the prices had gone up substantially, and now they have crashed, and the rate of speed of crash has been much faster than the speed of going up.
So, if I were to summarize, sir, we are below the pre-COVID prices?
Yes, sir. In
Okay,
many molecules.
that's how much. That's it from my side. Thank you.
Thank you.
Thank you. We have a next question from the line of Rohit Raj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So my first question is on the debtor days. So the debtor days have increased sequentially, and historically, whenever such an incident has happened, have we realized that the bad debt mounting up maybe during the 2008 crisis or any other such unique situations? Thank you.
So bad debts have not mounted up, but as I have told you, a lot of people have returned back the goods, saying that they cannot sell and they cannot pay. And with the current situation, we don't think the bad debt is going to be a big concern. The concern is the margins and realizations and the quantities.
Right, sir. Got it. That was from my side. Thank you so much.
Thank you.
Thank you. We have a next question from the line of S. Ramesh from Nirmal Equities. Please go ahead.
Hello, just a follow-up in Gunaji. So, based on the discussions we've had, after normalized supply chain, margins, pricing and volume growth, will you be able to improve your ROC to whatever you were achieving, say, 1 year ago? And how do you see that, move in the next, say, 2 years, 2 years, 2026? Will you be able to get back to the normalized ROC? Because ROC has been.
Well, ROC, there has not been a very steep fall. It's from about 26% to 21%, March 23 compared to March 22. 1 minute.
I'm talking more in terms of the first quarter trend. So,
first quarter trend, I don't know. We have worked out or not? We are working on the yearly basis. Sir, we are working on the yearly basis. We are not working on the quarter to quarter. So, I'll not be able to comment on the.
I understand that. So, given that you've gone through one of the worst quarters, so if you look at 23 ROC of 21%, what is the timeline you are giving yourself to achieve that, say, over the next 2 to 8 quarters? At the 25 end, should we be in a position to expect that kind of run rate where you can get that 21% ROC and from there maybe move back up to say 23, 25%? 26, is that possible?
Yes, sir. March 25, I think we should be able to return back. And one more thing, Mr. Ramesh.
Yeah.
I'll tell you, and that also gives me a little satisfaction. Our business model is very nimble-footed. So our limitation today is only to the extent of the stocks that have been returned back to us and our compulsion to sell them at a cheaper price than our cost price because of the market situation. But that is not a huge thing. Moment we get rid of it, we'll source it at a very cheap price and also sell it at some margins.
So in terms of your supply chain for third and fourth quarter of this year, in terms of whatever you are planning in terms of the volume pricing, you are reasonably comfortable in terms of being able to achieve your volumes for third and fourth quarter?
Exactly.
Okay.
Our only load is temporary, and that too of having forcefully compulsion to take back the goods. Otherwise, either you go with a litigation and other things, spoil relations with the customer, but there are others who are willing to sell them. But this is a very temporary situation for us, and we are very confident we will be able to come out with. We don't have any compulsion to keep on manufacturing. We don't have any compulsion, as most of the manufacturers and other companies have. We are able to switch over very quickly, as I am calling myself nimble-footed.
Wonderful, sir. Thanks a lot and wish you all the best.
Thank you, sir.
Thank you. We have our next question from the line of Rohan Gupta from Nuvama. Please go ahead.
Bhuvan, thanks a lot for the follow-up. Sir, the first question is on the very small business. There we have seen that revenues have declined, but your profitability hasn't been impacted. So that segment we see that you have roughly 56 crore rupees EBIT from the current quarter that has remained stable. So that business is not impacted in the current scenario?
Rohanji, let me understand. Can you please repeat once again?
Sir, I was talking about...
Sir.
No, sir. I'm talking about our non-agrochemical business.
Non-agrochemical business, yes. I missed the word non. Yeah.
So I'm saying that though the revenue there has declined, but still 53 crore rupees contribution at EBIT, which has been maintained at the last year level. So just want to understand, in that business, there is no impact of this China and all?
No, sir. You see, in that business, we are making to order, and we are selling after receiving the orders. We are not maintaining inventories, because every demand is specific. You understand?
Right.
The only impact there is the economies of consumption. Like in Europe, our sales of non-agrochemical products in Europe has got affected because of this Ukraine war, which has totally destabilized the economies of most of the European countries. So new projects are moving slow, new developments are coming slow, and our non-agrochemical business is mainly conveyor belts, which are linked to the new projects and new developments. And secondly, the revenues have come down because mainly the logistics cost has come down substantially. For a container to ship to Europe, we are paying $20,000-$25,000. Today it has come down to $2,000 to $2,500. And all those logistics costs was built up in our sales realization and revenues.
Right. I said last year in 2023 we had gained significantly in terms of the profitability in non-agrochemical. I mean, business contributed up to 170 crore EBIT. So as the new project comes down and all, do you see that there is a risk of declining in this business also? Because earlier we used to have roughly just only 50-60 crore rupees contribution from this segment, but last year it has significantly contributed to 70. So do you see that business is also going to decline?
Sir, it will decline, but not very significantly.
Okay, so probably...
Because we are not impacted by unnecessary revenues and stocks. We are not sitting on the stocks. The only thing is, if the projects are going down, then the buyers may delay the taking deliveries and all that. But there's not big impact on the stocks. And margins are fairly consistent, even now.
Right. And sir, in a post-pandemic era, we have gained significantly in Europe market and all, where because of the many local players who are not able to source the supply from China. Now, do you see that when the supplies have increased so sharply from China and the material is abundantly available, do you see that these local players and all who have probably vanished from the trade have come back again and are looking for the opportunistic business in the current scenario that may affect our market share? in a specific market like
No,
Europe and all?
Rohanji, we don't feel that those local players have again come up into the scenario. I think that advantage will stay with us.
Okay. And so just last thing, sir, there is such a sharp fall in agrochemical prices. Do you see that farmer level consumption and ultimately farmers are likely to benefit from the lower pricing of pesticide? Definitely when the season comes in H2 for us, maybe Q3 and Q4. Do you see that there is a possibility of, the overall growth at the agrochemical consumption may remain high and the farmers benefiting from the low pricing scenario?
Yes, I foresee that. The only thing is, particularly Europe, the only impact the farmers are going to face is the disturbance in the economies. Like when I visited some European countries, they were saying that the goods from Ukraine are being exported out of Europe through their ports, and the prices were so low that they get absorbed into those countries, and that is impacting the economy of their agricultural economy of those countries. If somebody is selling from Ukraine, say grains, at maybe $500 per ton, and the market price, local prices in Poland is $1,000, so the $500 per ton goods, instead of getting exported out of Poland, is absorbed into Poland, affecting their inventories of the produced product in Poland. These kind of disturbances are impacting the European countries, and the cost of fuel going up, the cost of living going up, and the capacity to purchase agro-commodities. Excess availability of agro-commodities in Europe is another big problem. Yes, I finished.
Sir, just one small clarification.
I request you to join back the queue, sir.
Yeah, thank you.
Thank you. I would now like to hand over the conference to management for closing comments. Over to you, sir.
1 minute. Thank you everyone for joining us for this conference call of Sharda Cropchem. I hope we have been able to answer all your queries. We look forward to such interactions in future. We hope to meet your expectations in the future too. In case you require any further details, you may contact us or Mr. Devendra of SGA, our Investment Relations Manager. Thank you very much.
On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may disconnect your lines.